Yeah, I
Right.
love bringing people an opportunity
Yeah.
to grow their own wealth. That's my purpose in life, is to help others to grow their wealth. And I'm finding the ability to identify syndicators that are getting these large transactions, and I'm bringing investors to those transactions, giving them an opportunity to invest in the deal and get the returns that you can get in real estate, and also the tax benefits as well.
Welcome to the Threefold Real Estate Investing Podcast. This is the podcast where you'll not only learn how you can achieve massive success in multifamily real estate investing, but also how you can simultaneously pursue great relationships with your family and a better walk with God. You can achieve financial freedom through real estate investing without sacrificing the relationships that mean the most to you. Now, here's your host, Lee Yoder.
Welcome back, Threefold listeners. I hope you're having a great week and enjoying your summer. Got another great guest for you today. Craig Stevens is joining us from up in the Northeast. He is a certified public accountant with 30 years of experience as a senior executive in the finance industry. He's a frequent speaker at industry conferences, a financial coach, published author. He was also featured on a TED Talk. We'll throw that link in the show notes. His TED Talk is called The Wealth Factor, which is pretty cool. He's been able to study the habits of successful global investors while traveling the world. He now has a portfolio in real estate over 260 million in transactions. Personal success of wealth building is built upon the important fundamentals of saving and investing strategically. As a self-made millionaire, he's passionate about helping other individuals develop their own personalized wealth growth strategies. Definitely want to talk about that today. This focus has led him to found several startups, including Groundbreaking Real Estate, his company that gives common investors ways to tap into high return investments that may have been previously out of their reach. So a lot to get into there, Craig. Thanks so much for joining us today. Welcome to the show.
Really appreciate it. Thanks for having me, Lee.
Yeah, Craig. So can you take us back, certified public accountant, in the finance industry? What initially got you interested in real estate and made you start kind of moving in that direction?
I spent 25 years working as an accountant, leading finance teams to do financial reporting. It's no surprise that that's a lot of grueling hours at times and very stressful environment to be in, because you're getting ready to do financial closes and things like that. And at one point, I just decided that there needed to be something else for me to look forward to besides just retiring in my day job. I did enjoy what I was doing. I learned a lot from it. Yeah. But I started to think a little bit more about what I could use my financial experience to do to make myself, put myself in a position that I could leave my day job at some point a little bit earlier than the typical 65, 70 years old. And start my own business and leave a bit of a legacy for my family as well. So that's where I turned to real estate. I've always been intrigued by real estate. My grandfather did some real estate investing and fix and flips way back in the day, the 1970s, 1960s. And I got to see some of that as well. It's always appealed to me. So that's where I started studying more.
In the finance industry, Craig, did you see real estate there? Were you ever doing, reporting and auditing and prep for like real estate guys that you got to kind of see the guts of it to get you interested?
Great question. I was an auditor for insurance companies, but I was always driven about investments, always interested in stock investing, bonds, real estate, mortgages. So actually, I did steer my audit work to be auditing investment portfolios. So I audited large insurance companies' real estate portfolios and joint venture portfolios, and it started to give me a little bit more insight into that market.
And it looked like a great investment to you. From what you were seeing, it looked like a viable option for.
Yeah, these large insurance companies have huge amounts of capital to invest, that are life insurance companies. So they have years to invest money, and they were making really great returns off of real estate.
Okay. Interesting. So as you got interested in it, Craig, like how did you get started? What was kind of a first step or two?
For me, we would, first I had to educate myself. So I knew about auditing real estate to a certain extent, but that's only part of it. So I started really listening to podcasts, going to conferences, meeting as many people as I could in the industry, and also just reading up on things. And building up my team. So starting to meet people that I could work with as far as brokers go, lawyers go, and starting to dive into it a little bit more.
Nice. And is this up in your area, Craig?
Yeah. So I was based in New York. I've recently moved to North Carolina a couple of years ago. Just to get away from the hustle and bustle. And I've left my day job last year as well. So my dream that, as I started to build my portfolio in real estate to retire early, I was able to do it last year.
That's awesome. That's awesome. Okay. So making connections, learning, how did you jump in?
I was really focused on an area near where I live. So I lived in Westchester, New York, and kind of picked an area that was local. Did a lot of driving around, looking for the right neighborhoods to invest in, and just started making offers. So I I did the
single family
analysis.
homes, multifamily.
Yeah, they were multifamily homes, so small 3 to 4 family buildings. Perfect. In the Westchester area, and really just setting aside my bonuses and some of our savings and making sure that we were investing them as much as possible in real estate. Once we decided to move in that direction, I had found a few tools to do the analysis on, and was doing a lot of behind the scenes analysis on transactions as I was working my full-time job and making offers as much as possible. Nice.
So you've got some capital. So people are in different situations. You've had a nice career. You've got some capital, but you just made it sounds like a pretty big transition in where you wanted to invest that capital. Instead of just pouring it all into a 401k, pouring it all into the stock market, you're choosing to be more active with your money and kind of invest it yourself, find your own investment opportunities, specifically in real estate. So you're educating yourself, preparing yourself. Were you nervous about that? Were there, you're networking. So it's not, maybe that helped. Was your wife on board with this? What was it like because this is, a lot of people consider this an alternative investment or an alternative asset class. Tell us about that, getting into it. What were the nerves like, and how did you overcome that?
I would say the first transaction that I finally was able to close on, I was really, really nervous. Probably, the top 10 times I've been most nervous in my life.
Okay.
We did use large amounts of our savings that we had to invest in real estate. So even though we did have capital set aside, we stretched ourselves pretty thinly at times. I had a nice W-2 check coming in, so I could always rely on that. And I didn't need as much in savings, so I stretched myself. So even somebody with less capital would just be looking for smaller deals than I took down, right? I was taking down larger deals about the same size comparative to my income and net worth. And first ones, I got really nervous on my first one. And then as I started to kind of learn more about it, I was getting to a stage after my first 5 deals that I wouldn't even need to see the property before I'd make an offer.
Yes. Right. Yeah. What a progression. Some of the motivation behind it. So I'm just assuming that a part of it was that buying real estate versus just putting in the stock market, you felt like there was going to be cash flow, that you were going to actually make money today, not just, I'm assuming you thought you were going to build wealth long-term, and that the properties you bought would be worth a lot more in 10 years and a lot more in 20 years. And so there's going to be a nest egg there, but was it the cash flow that you were after that would be very different than maybe just putting in the stock market and saying, hey, this is going to be nice when I'm 65?
There is a balance between appreciation and cash flow. So there are some markets where the cash flow is great, but maybe the appreciation is not typically as strong. In the New York area, it tends to be lower cash flows where I was buying properties.
Okay.
I was lucky if I made kind of 2-3% a year in cash flows, but they're in likely high appreciation areas. And that's really what I was moving forward on, was growing an appreciation in the asset value.
Okay. Interesting.
My net worth to a point where I could continue to maybe sell those transactions, move on and buy more assets. And that's what I did. It was this value add approach of buying assets, improving them, selling them later on, and then going out and redeploying the capital.
Great. And those are just areas that really see inflation, right? Maybe more than other areas where prices, just price of everything keeps going up, and the prices of assets are definitely going to go up. They're also, pretty desirable areas, right, Craig? So people with money whose incomes are inflating, and they're going to pay more and more in rent, right? So you're buying in those areas, getting in front of that stream that's going to carry you with it. So you had a longer term plan, Craig. I mean, it can't be that, hey, I'm going to buy these properties and it's going to make me enough cash flow that I can retire in the next year or two. I'm going to hold these for a while. I'm going to pay, probably pay down the loan a little bit. I'm going to, create some appreciation. I'm going to add some value, and then, hopefully ride the market a little bit. And in a handful of years, I'm going to have some equity here that I can take advantage of.
Absolutely. And then I've been reusing that equity to buy properties more cash flow heavy. So now we have more of our investments are focused on higher cash flow returns, especially in this environment right now where cash flow is going to be quite important to stabilize the asset value that you have.
Yeah. Yeah. Because we may not see appreciation coming so much like in the next year or two. What do you think?
Yeah, that's what I'm
Okay.
thinking is that
Yep.
because of the high interest rates, appreciation is starting to stabilize or decline in some markets. So you really need to have something that's cash flow strong that you can either hold on to and weigh out some types of storms that we may see,
Right.
or it should add additional value to your property if you can increase that cash flow as you go along.
Yeah, good point. And we're not even in a recession yet. If we end up going to recession, that's going to, obviously decrease appreciation most likely. When rent comes down, people lose some jobs in recession, then we don't see the appreciation. A lot of times it goes in the other direction. So that cash flow is what sustains you. So cool. So neat, you're making that transition, but just a little bit more about how that went, Craig. So you're building up a portfolio up there in the New York area. I always think it's a great idea to start local. You're starting local, you're building relationships locally, you're driving to the properties, seeing them. I think, most people are nervous, but when you can lay your eyes on it and see it, you're doing that early, but then you do start to build up some comfort with it. So like you said, now you're buying properties that maybe you don't inspect so thoroughly, or maybe not so much at all, because you now know the area, know how it works. So you built up a nice portfolio, Craig. A few years later, what did that look like when you end up kind of selling that and deciding to transition? Sounds like maybe more south to some cash flowing areas. Tell us about that, building up that portfolio, making that transition.
So we got to a point where we had acquired 5 multifamily properties in the New York area, right around us, all within, say a mile of square area.
Yeah.
And I was also spending time on my job traveling to Indiana. So I also acquired some properties in Indiana during that time.
Yeah.
That's where I bought something that was a little bit out of reach. I bought a building in Indiana that was a 9-unit building. I didn't have the cash available and I wasn't able to get financing quickly enough to acquire the asset. So that's one that I actually made an offer on, all cash offer without having all the cash.
Oh, wow.
And where I started to really pull in money from other folks to make these purchases, but also I hadn't seen the asset before I made the offer because I didn't have time. But I was familiar with the area. I had some friends down there that were able to go see the property for me, and the broker did a FaceTime tour with me.
Awesome. So you're building up this portfolio, and then how many years, Craig? When did you start this? Maybe just give a little bit of idea of the timeline, and then when did you decide to kind of start unloading some of these?
I started in 2014 acquiring properties, and probably within the first 3 years, I'd acquired 4 properties in New York, just 1 or 2 a year.
Yeah.
And eventually got up to the stage after about 6 years where I had 9 properties between New York, New Jersey, and Indiana, and 35 tenants.
Okay. And this is 2020 now.
6 million. Yeah. Yeah. That was around 2020. All my own portfolio. So no other investors with me, except getting some kind of short-term loans to acquire some of these when I didn't have the cash I needed. Nice.
And then 2020 comes around, property values are screaming higher. You decide to unload those. You're kind of transitioning your strategy. Tell us a little bit about
that. I started growing a little tired of being a landlord. Even though you have property managers that are doing a great job for you, you still get called on at times to answer some difficult questions. You still have to deal with tenant issues that occur, large property decisions as to where you want to, how you want to change the asset, improve the asset. And that got exhausting, especially while I was working my full-time job.
Yeah.
So I started to find the world of syndication investing and started investing as a limited partner in transactions where someone else manages it for me. And I was able to start selling my properties while the values have been increasing, as you said, over the last couple of years. I've sold 3 out of my 5 buildings in New York, and looking to probably sell nearly all of them. Sold my property in New Jersey and started investing in limited partnership opportunities, or using the cash to start to grow my own business, which I'm focused more on capital raising now.
Yeah. And so you're bringing others in to do exactly what you're doing.
Yeah. I love bringing people an opportunity to grow their own wealth. That's my purpose in life, is to help others to grow their wealth. And I'm finding the ability to identify syndicators that are getting these large transactions, and I'm bringing investors to those transactions, giving them an opportunity to invest in the deals and get the returns that you can get in real estate, but also the tax benefits as well, without having to do the work, which I'm not missing anymore.
Yeah. So Craig, you've gone along this journey. You're probably talking to a lot of people now that have the W-2 that you had just up until, what'd you say, year and a half, 2 years ago? Year ago. So you're connecting with them on that level, and they're interested in real estate, but you're like, guys, I've done it. I've been active. I bought the small stuff. I've been active, like even with Property Manager. it's active. It is another job, but hey, I found this syndication. We can invest in other people's deals. I'm sure though, Craig, like they're nervous like you were. Well, Craig, like, I don't know about real estate. And now you're telling me like, don't even do it myself. So I'm giving up control and I'm doing it with somebody else. What are some of the fears that they have? And Craig, how are you calming those fears or giving people the confidence that they need to jump in and invest in real estate? Let's talk a little bit about that.
You're right that they are really busy. They may have been interested in investing in real estate at times by themselves, right? Acquiring a property. They always have that dream of acquiring something and renting it out, but they don't have the time. They're busy workers in corporate America. They don't know where to start next. So I think partly what my role is to educate them on real estate investing. What's it really mean to invest in these transactions? I've done it the hard way. I learned the hard way by myself,
right.
Just kind of like making big mistakes along the way. Now I think that since they've come to know me and trust me, maybe through the many years that I've known them, it's probably, hopefully makes that transition a little bit easier for them. I do find that once I'm able to tell them a little bit more about the transactions, why I like them, and that I'm investing in these transactions alongside them, that gives them the confidence seeing what I've already accomplished in real estate. Yeah. And now leaving my day job gives me additional credibility. I think that I must know what I'm doing in the real estate world. But there's still nervousness absolutely associated with investing in your first transaction, whether it's, just as a limited partner or buying a property yourself.
Yeah. Craig, guys and girls that are in the situation that you were in with W-2, making good income, but very busy. Do some of them say, yeah, Craig, I think I just want to do it myself. Like, I think I want to go out and buy my own. And what do you say to them? As here's some benefits of that. Here's some negative. Yeah. How would you talk them through maybe, okay, that's one option, but maybe you should consider syndications. What do you say to them when they're thinking of being active?
People are still very determined to own the property themselves and be able to make the decisions around that transaction, what types of tenants to bring in, when to bring them in, and when to exit tenants or improve the properties, whatever those decisions are. There is a tangibleness aspect to that, to be able to go to the property down the street and literally walk in and say, I own this, as opposed to investing as a limited partner in a syndication. You don't have that same ability to make decisions about how the property changes.
Right.
So I find that a lot of people will maybe start as a limited partner, and I think that's a very good place to get educated on real estate. I love to help people to learn more about investing themselves. And if they do want to take that route of buying a property themselves, I'll happily educate them on that too. So I find that it's often a mix. It's a balance of buying their own properties and managing them, but then maybe having the cash to invest, but not being able to find another property to manage. And then they decide to do a limited partnership investment in the syndication. Yes. So I think there's great pros and cons. I've decided to take the route of backing off as being a landlord and participating more as a limited partner. But I think people that are really intrigued and excited about real estate, buying a property is an incredible experience, as you know.
Yeah, absolutely. Yeah, I just think the busier you are, I always kind of just question, like, how likely do you think it is that you, having a full-time job, being very busy, are going to be able to find a good deal as compared to someone who's doing that full-time? Why would you be able to outcompete someone that's doing it full-time? Maybe you can. And maybe there's not people, if you stay real local and you buy small stuff, maybe. But there's people that are doing it full-time. So I would think like finding a good deal, and then kind of same thing with operating. Like, once you find a good property, you got to operate it really well. And like you said, Craig, even if you find a property manager, you still got to manage that property manager, and the buck stops with you, and you're gonna have to answer questions. So do you think you're going to be able to do a better job at that than as compared to someone that's doing it full time? It's just something to consider. And I'm sure that, part of, your thought process, Craig, when you said, man, I don't have the time to do this full time. And now I'm finding guys that, guys and girls, and not just them, but like teams that are doing this full time, and companies that are doing this full time, finding properties. And sure, if you have to give up all the upside and it's not a very good investment, well, sure, then don't do it. But if you can still make really good returns investing with them, then sometimes, that kind of alleviates that number one, you don't have to do it actively. But number two, they should be able to do it better if they're doing it full time and you're not. So Craig, it sounds like, you've done a good job finding some good people to partner with, some companies to jump in with. And then now you're bringing others in and maybe introducing them. I think that's always really important, because how could somebody who's never invested in syndication know which jockey, we'd say, to pick, know which sponsor, which group that's finding those good properties and operating them really well? How do you know if they're any good? Well, to me, and I would tell people that talk to me about, potentially investing with us, I'd tell them the same thing. You got to talk to people that have done it, because I can tell you how great we are. I mean, I'm going to try to be very honest, but I'm probably going to put my best foot forward. You need to talk to somebody who's invested with us and for a year or two, even, right? Like someone that's done it for a while and seen up close and personal how we communicate. So I think that's probably the value that you add, Craig, correct? With your sort of say, like you just said, hey, number one, I'm putting my money with them. But number two, like I already have put my money with them. I've seen how they operate. Is that right? That's probably part of what the value that you add to other investors.
Yeah, being able to be in the network full time, right?
Mm-hmm.
Meeting others in the real estate industry and having a chance to see their experience, learning more about who has invested with them in the past, like you said, and how has that gone for them.
Right.
I think that gives me an ability to look. I really like what I'm doing in the capital raising, because I'm able to look at multiple deals across the United States now and pick the best ones that I like.
Yeah.
Rather than just being a sponsor and really honing in on one investment opportunity and being the lead sponsor. Instead, I get to pick from, multiple assets across the country that many smart sponsors are working on.
Yeah, great point. And Craig, I was advise passive investors to try to be very active passive investors. And most of that's on the front end. But, when people come and partner with you, Craig, to jump into syndication, you're a very, very active passive investor. And so if they're leaning on you a little bit, they can be a little bit less active. Again, a little too busy, probably to spend a ton of time vetting all these sponsors. They're kind of letting you do that, let you be an extremely active passive investor, so they can be a little, less active passive investor, so it's more passive for them and jumping with you and lean on you with the research you've done on these groups.
That's right.
Yeah.
If you invest as a passive investor, say $50,000 in a transaction that they needed to raise $10 million for, you're going to have a hard time getting the attention of the lead sponsor, to a great degree.
Yep.
And getting all your questions kind of answered and being comfortable with every aspect of the deal. I'm able to bring in enough money where I actually go to tour the property for them.
Oh, cool.
In a lot of cases, if you're a limited partner, you're not going to get to tour the property,
right?
Because it might not be in your location, not just because you're not allowed to. So I get to tour the property. I get to meet up with the sponsors on a regular basis. I get to, I have the time to run the financial analysis and look at the detailed financials and run stress scenarios. I think that's a fun part of being a limited partner investor, but also having more active participation, as you said.
Yeah. Really good stuff, Craig. Just a lot of reasons, but you got to be careful. You got to make sure you're educated and network well before you jump in. But I think it's a great way to go for people that are busy. Let your money work for you. Don't take on another job. But you got to do it well, right? So Craig, with your experience and talking to so many investors and bring them in and showing them, the world of syndication and multifamily self-storage, stuff like that. What would you say is a key ingredient to being a successful real estate investor?
To do well in real estate investing, I think you have to immerse yourself in the industry and really surround yourself by others that are being strong in the industry, that have the knowledge and the experience. I just got back from a conference last week, had a fantastic time. And it's just, you walk away just realizing how many smart people there are in that room and how many people you get to meet and network with that could be your partners later on. Yeah. So it's networking yourself, being out there and meeting others that are like-minded. And secondly, it's letting the world know what you're doing. So don't be shy about telling people right now, even if you have a full-time job, that you're investing in real estate, that you're doing real estate investing, that you're excited about it, that you're learning more about real estate investing, because eventually that will help to grow others' trust in you and grow your credibility in the real estate industry. And you may need to call on them later on, or they may be interested in partnering with you or working with you later on. Yeah.
You don't want them to find out that you're investing in real estate the day that you're asking them for money or the day you're asking them to partner, right? You want them to know that you've been on the journey for years.
Absolutely.
So soon about now, really good stuff. And then immersing yourself. I mean, it's a big world. Like you don't even know about it. And then you find out about it and jump in and you're like, my goodness, it's a whole new world. There's so many things like that in life. Well, Greg, I know family is really important to you. I know your wife is pretty active in the business with you, joining you there. What's a key ingredient, or maybe a little bit about how you and your wife make sure you're having success in the things in life that are more important? I mean, there's a reason you wanted to, move off of your W-2 and get more into real estate and build that portfolio. You guys made a move recently. I mean, I know a lot of this is geared toward your family. How are you and your wife making sure that while you're building this successful real estate business, bringing others in and investing in these great deals, how are you making sure you're having success outside of real estate as well, maintaining your priorities?
It's tough to do sometimes, especially when you're starting your own business. I'd like to hope that I'll become even more successful at that balance in the future. I think, one thing that's important to us is really getting outside and doing activities, making sure we're spending time with our kids as well. We have 2 boys.
Yeah.
Finding that balance, it's really important to kind of close your computer, even though you could work all day at your desk and sit there,
Right.
like carving out that time on your calendar to spend with your family, to spend with your friends. And we really do make sure that for the most part, we're not working much on the weekends. So our weekends are spending time with our friends and family.
Yeah.
And really engaging and the things that are important to us.
Yeah, you got to be intentional about it, right? I mean, yeah, when you're, when you have a W-2, you might have a really busy W-2, but typically, a lot of times you can come home and shut it off, shut the computer off. But when you got your own, you can work all the time if you want. I mean, you get to decide, so you can do, and it's good and bad. I mean, you have the flexibility, right? The autonomy, but it means you can do it all the time if you want to. Well, Craig, this has been great, man. It's always helpful to hear other people's journeys, especially, ones that people can relate to. Someone that, was doing the corporate gig and maybe did some small stuff, some small multifamily, built that portfolio, but saw, man, this is another job. It's, it's time consuming, and maybe I could just partner with other professionals that are doing it full time and doing it high level, have a team, been doing it for a long time. And now you're bringing others in to see the light on that. So it's really great. Glad you've had so much success around that. I know we've got your show note, or we'll put your links here in the show notes, Craig. I know Groundbreaking RE, as in realestateinvesting.com. Send everybody over there. And then I know you're active on LinkedIn, Facebook, and Twitter. So those are the best places for people to find out more about you and reach out to you, Craig.
Yeah, please do. If they LinkedIn, I'm very busy on LinkedIn usually. And if you want to learn more about capital raising or just investing as a limited partner in transactions, love to help other people to kind of learn how to get into this business.
Awesome. We'll send me your way. Well, Craig, this has been great, man. Before I let you go, I always like to ask my guests, how might my listeners and I be praying for you in the coming weeks?
Thank you very much. I appreciate that.
Yeah.
It really is this balance. I think lately I've been a bit strained. I have 2 startups. One is in the property management. It's called Short-Term Rentals. And we manage properties. That one launched about a year ago as well. So I left my W-2. My wife left her W-2. A lot's going on with these 2 businesses, and I have a hard time striking that balance. So just, please do, if you have a chance, give me a quick prayer to make sure that I strike that balance well and still spend the right amount of time with my family and do those things that are really important in my life.
Yeah, man, it's hard. Yeah, a lot of us need to pray for that, especially, the entrepreneurs out there. So be happy to pray for that for you and your family, Craig, you and your wife. So great. Well, hey, thanks again, man. It's been really helpful. I appreciate you coming on, sharing your experience, sharing your expertise with us. Thanks again.
Awesome. Thank you very much, Lee. I had a great time.
Yeah, take care.
Thank you for joining us for another great episode. I hope you'll take action on what you've learned today. If you enjoyed today's show, please consider leaving Lee a 5-star rating and review. And check him out on threefoldrei.com. Until next time, 1 Timothy 6:17.